Good morning, ladies and gentlemen. How's everybody doing? Welcome back to another pre-market watch list here today. So thank you guys again for tuning in. I know I haven't been on for the past couple days. Do apologize. We've had some audio, video camera issues. And so anyways, regardless, we're here now and that's what matters. So do apologize about being a little absent recently, but we're here now. We're here now. And still, you can kind of see the lighting and the camera is still being a little weird. Not sure exactly why it's doing it the way it is, but it's okay. So glad to have you guys back on. Glad to be here. So there are a few stocks we're going to be keeping an eye on. I don't normally talk about ETFs, but we will look at DGAZ and we will look at even UGAZ just a little bit because I know many people are probably having questions as to why they're moving the way they are, why DGAZ is down so much and why UGAZ is up so much. What's going on? J1 305, good morning. So today should be a little interesting, so we'll get into it. All right, so I'm gonna start sharing the screen for you guys right now. All right, so I will first talk about AMRN. This is a stock yesterday that had a really big sell-off. Actually, well, 2 days. For 2 days, it's had this really big sell-off, and it's down quite a bit. Personally, I wanted to see it down towards 13, but I do think we're getting ready to see AMRN potentially have a long day. So I do foresee potential long plays on AMRN today. If this continues on the path it's on and kind of curls up, let me zoom in on this too. Okay, if AMRN can, it already popped up. If it curls and keeps on this path, we could see it actually turn into a long play, which would probably run up into about the price of $18, maybe $17.50, right in that area. So I do think there is some long plays to be made on AMRN. So keeping that on watch. It's had a really good run. It's had a really big sell-off. Chances are there will be some sort of bounce to come on this. So definitely keep AMRN on your watch for a long play. Good morning, guys. Good morning. Good morning. All right, so that's for AMRN. We're not going to talk too much on there. It's still developing, but definitely keep AMRN on your watch list. Do think that could be a very good play here in the future. Next, we'll talk about UGAZ. So you guys can see UGAZ hit highs of, was that it? Really? Yeah, I was going to say that didn't seem right. So yeah, UGAZ hit highs of like 250 today, and now it's pulling back drastically. So that's just because the futures are up and everything that goes around with natural gas. But for those of you that trade UGAZ, for those of you that trade DGAZ, there might be some interesting volatility and movement on these two ETFs today. I will be keeping them on watch. Personally, I liked DGAZ for a long here pre-market. I didn't end up trading it. But what I think we'll probably see is UGAZ come down some more here this morning, probably sell off a little bit more. Eventually, UGAZ will probably find some sort of bottom and then it will bounce. And when that happens, you could watch UGAZ long, or even if some of you guys can even short it. I don't know how many of you guys can. I can't. But if you could, you can even watch for a short play on DGAZ, right? So again, I think there's going to be some good volatility and good movement on these two ETFs today. So that's probably something you guys would want to maybe take a look at too today. Good job. Good job. Yeah, I was about to buy it pre-market and then I didn't. And now when you look back, you're like, wow, you should have. And so anyways, it's okay. It's been a beautiful trade. It's moved a little bit from $1 from its low here, DGAZ. So definitely keep DGAZ, keep UGAZ on watch. I think, again, those two ETFs are going to see a lot of volatility coming in here today. GOOS is one I'll talk about, GOOS. So GOOS had its earnings today. As you can see, it's gapping up and it's starting to move higher. Now, it doesn't have a ton of volume pre-market, but naturally on the days where GOOS does have its earnings, it moves a lot. You can see the last time it gapped up and it moved like $6-7 a share on the day. So playing on the idea here, if you look at GOOS, look where it's at. It's right at a 52-week high. So GOOS does have the potential for a 52-week high breakout today for a long play. So going to keep GOOS on watch for a long. For a break over its 52-week high, maybe we'll see a nice momentum play turn out of it. Again, it's kind of light on volume right now, but when the market opens, we'll probably see an increase in volume to the point where we're able to successfully trade it. So I definitely think GOOS is going to be something you want to watch today as well. Daniel, I probably wouldn't. I mean, I don't trade natural gas ETFs like that. So again, I don't know, but I do know that in this time of the year, as you get into the winter season, there usually is a spike in natural gas. So that's probably why you're seeing this crazy effect taking place with the UGAZ right now. But personally, just by the chart, UGAZ is extremely overbought, and I would probably look for a better entry in terms of a long play than, where it's been at today. Yeah, been a little absent. That's all good though. All good. So GOOS, keep that on watch. All right. I will talk next about Netflix. So I do kind of like Netflix because it had this short play that came down all the way. And so really, I need to talk about the market here first. So when it comes to a lot of the bigger name stocks, if you're watching NVIDIA, you're watching BABA, you're watching Netflix, Apple, Google's, Facebook's, Amazon's, anyone you're really watching, right now might not be a bad idea to start watching them long bias, because you can see the market can potentially be in a inverse head and shoulders pattern, which would be a bullish move. So if in fact the market can hold up with the way it is, we might start seeing a new bounce, a new bullish move happening in the market, which means we'll probably see an increase in price on a lot of our AMD, Netflix and stocks like that. So keep an eye on your semiconductors, even NVIDIA's, Micron's, Facebook's, Tesla's, Apple's, Amazon, all that right now. Keep an eye on those long bias as the market's trying to create a support and a base down here around the 271 price, 270s, which is a previous left shoulder in the inverse head and shoulders pattern. If you're not familiar with inverse head and shoulders pattern, just look it up, educate yourself. That's a potential pattern that we are in right now currently, which could then result in a lot of our bigger name stocks having some bullish moves here coming soon, okay? I will talk, I'll touch on PCG here. PCG is a little interesting. We've seen the big sell-off. I think PCG has lower to move. I like PCG around $20. If I had to think about buying PCG, it'd have to be around 20. There might be some short plays coming, but I mean, they've been getting hit with some really negative news in terms of all the California wildfires and all those fires taking place out there. And so they've been getting hit with just a train of bad news, which is resulting in their stock going lower and lower, having some crazy shorts, some crazy volatility. So right now, PCG is trading at it's trading way above its average normal volume right now. That's why it's so volatile, because of the news and the catalyst. And so that's why it's seeing a lot of volatility. It's trading more volume than it typically does. This is the reason we're seeing this type of movement on PCG. Personally, I think it has lower to go. I would watch it for a short personally. I know it seems kind of crazy, but I would still keep it on watch short bias. And I really wouldn't be long bias until we start reaching prices of $20 to $18, unless there is some type of formation of a strong bullish pattern or trend that occurs before those prices that I've talked about. So for me, PCG, I do see lower as of right now. Maybe not today, but I think in the coming days to weeks, we'll see PCG lower. Other than that, I mean, I'm just kidding. So there's probably a few more things we could talk about here today. Viking Therapeutics, I haven't looked at Viking Therapeutics. I mean, I looked the other day, but I haven't really done any research on them. I think they had somewhat of a good day the other day, right? Didn't they have they had a day where they had some good movement? Oh yeah, so they spiked pre-market and came down. So, I mean, for me, I've seen Viking Therapeutics trade. I don't like the way it trades. It's usually pretty wishy-washy on all of its news. Whenever it has some good news, it usually gets pretty wishy-washy. But I will say this, that right now, VKTX is in theory, at a buy. It is a buy right now, theoretically. Maybe even a little lower, maybe at $10, but right now, Viking Therapeutics is really a buy. If you're a technical trader and you go based off of support, resistance, and bouncing, and if that's what you do, then right now, Viking Therapeutics has entered into the buy zone. It really has. If you look at this, it's in a buy zone, right? If we change this over to a green, this is the support. So theoretically, Viking Therapeutics is in a buy zone, and anything, really up here is your sell zone. All right, so theoretically, it is a buy, but I'm not going to buy it. I don't follow it enough, but it is getting into that terms of where supply would be. There are more people probably thinking about buying Viking Therapeutics around 10, maybe even 9. So we're still kind of working our way into the buy zone, but I wouldn't be surprised if you start seeing some Viking Therapeutics pick up in the future. Thanks, Jake, on the background. I appreciate that, my man. Yeah, so here's another thing that we saw. So on CNBC, they talked about a death cross. You know what's funny? Another thing that's funny is CNBC is just now talking about death crosses, even though us here in the boiler room, we've been talking about death crosses for the past 5 months. So again, it always seems like CNBC is just a little late to get to the party. But yeah. So they're referring to a death cross that I haven't even looked this morning, but it may have happened. I don't think it's actually happened. I think it's close to happening, but CNBC talked about a death cross that could happen on the Russell 2000 small cap index. So they're basically going on the idea that the Russell 2000 is coming very close to having a death cross, which signals that we could be moving into some bearish times. A lot of technical traders and long-term traders go based off of the indication of what's called a golden cross and a death cross. Death cross being bearish, golden cross being bullish. Right now, the Russell 2000 is potentially heading right into a death cross, which would then signal it's in a bearish move, and we could see bearish moves coming hereafter, which isn't a good sign for the overall market, et cetera, et cetera. So what do I think about it? I think that CNBC is a little late to the party. They could have been, talking about death crosses, months back, but, at least they're here now. So yeah, it's coming to a death cross. That means most of the selling has happened to get it to that point. So I wouldn't even worry about the moving averages crossing. Watch for the price action, because so much selling pressure happens when so much selling pressure happens, eventually things will get to the point where they could have a death cross. But the death cross doesn't really mean anything until it stays a death cross, which means kind of like, when something breaks out, it needs to come back and test the breakout level before we can really confirm that it might want to move higher. Same thing with the death cross. If it does cross, chances are, the price action of the Russell 2000 will then bounce back up, creating a small golden cross, and then we might get a lower high, and then we start trending down. So I don't think it's anything to be worried about yet. Short term, long term, yes, right? Like right now, it is what it is, but long term, it could create something much bigger. So for right now, death cross, Schmesh cross doesn't really matter until it proves that it's legitimate. So what's that mean? Wait for it to cross. If it stays crossing, yeah, it's probably bearish. But again, from videos I made a couple months back, we talked about like 50% of the Dow Jones stocks being in bearish territory because they already did death cross. So I made a video months back saying we were heading this direction. Then CNBC just came out, I think it was yesterday or 2 days ago or 3 days ago, something like that. A couple days ago, they said that 60% of the S&P 500 is now in bearish territory. So again, there's a lot of things in bearish territory. The market, don't be fooled. The market isn't doing well, okay? It looks like it's doing good because when you look at the major indexes, the Dow, well, even the Dow and the S&P and all these things don't really look good right now because we've had this massive sell-off and correction. So none of it really looks good per se. But if you were to stop looking, if you had a quick way just to look at how all the stocks are doing as a whole, one by one, you would see that the market's really not doing well. It's actually, in fact, it's doing pretty poor. But the reason it looks like we're doing okay is because you have a lot of these really, really, really big market cap companies that have an extreme weight on the overall indexes. They're still doing somewhat okay. So they're holding up these major indexes to look like it's not so bad. But if you were to take away, if you took away all the major stocks or hold up the indexes, it would just get demolished. Right? So again, we're not really doing good. It just appears that the market's doing good. Okay? Is 60% on a test good? Like if you get a 60% on a test, is that good? No, that's pretty bad, right? Because you really got, majority of it. I mean, you got almost majority of it wrong, right? So when you think about the market, 60% of the S&P 500 is in bearish territory. It means only 40% is actually doing good. So realistically, the market, if you were to grade it right now, it's underperforming. It's failing theoretically, realistically. If you're talking in terms of percentages, only 40% right now is doing well, which means realistically the market as a whole is failing. But the only reason it doesn't look so is because some of those top performers in that 40% have such a large market cap. It's helping prop or look to be propping up the rest of the market, even though some of the other ones are dragging them down. So again, I wouldn't say the market's really doing all that well personally. Let's see. Anyways, that's where we're going to end it here for you guys on YouTube. So as always, thank you guys again for tuning in. I'm going to work on this lighting. The lighting isn't that bad, but maybe it could be a little lighter. I guess it really doesn't matter. I'm not all that good looking, so you don't really need to look at me too much more than you guys already do, right? So anyways, I think today, start forming maybe I don't want to say form a bias, but start being more optimistic on potential long plays with where the market's at. We've had some selling. It appears that we might be trying to conclude on the selling. We're starting to see some support basing in the market around this 271's price. That's the Spider ETF. So we're starting to base. If we base and we start having some bouncing days, then we'll probably start to see some bullish movement on the large cap stocks. In terms of penny stocks, I'm still not seeing anything that really looks good, so I haven't been trading them. Hasn't been, I mean, there was a few the other day, but really we haven't been seeing too much going on there. So again, still holding on to these. And also keep an eye on your volatility ETFs. If you're long TVIX, if you're long UVXY, definitely be careful, because if the market goes up, the volatility is going to drop, and then those things are going to drop like a rock, okay? Bobby, we have a big chat, so there's not one on. So like if you guys join into our premium service, by the way, so if you guys are new here, but yeah, if you join to our premium service, we don't really do like one-on-one interaction. It's all in a group setting because we have a lot of members, but we do have weekly classes. We do have a whole course. You're constantly being mentored by me and a few other of our moderators and traders in the chat room, because we're always active and we're always there answering questions. So it's like you kind of have a personal Google, with you throughout a portion of the day. We're always starting around 7:30 to 7:30, 8 in the morning live. So we're a pretty active community, right? So, if you're looking to develop a little bit more in trading, the best thing I can always do is don't just take my word for it. Just talk to some of the people in our chat room that are premium members, and they will tell you their personal experience of what it's like being a member, okay? With that being said, we're ending it there. No more. I'll see you guys all tomorrow morning for another pre-market watch list. Take care.